Yo, what's going on, boys? And in today's video, I'm going to show you guys how to actually pass your evaluations with one trade. Last video, I talked about how you should actually go about, passing your evals the legit way, depending on your skill level within trading. But in this video, since CPI is Friday, I'm going to talk about the CPI method. And this will literally help you pass your evals with just one trade if you do everything that I state in this video correctly. So without further ado, let's get right into it. The first thing that you guys are going to want to do is choose a prop firm, okay? There are two prop firms that I recommend for this. Number one is Lucid Trading, which I'm on right here. But the key is that these evaluations have no consistency rule, and that is the kind of accounts that you guys want to get. The reason I recommend Lucid and Alpha Futures is because these two firms have tons of promo codes going out throughout the year. You can literally get these accounts for 50% off, I'm pretty sure. And so these are the accounts that I would get the 50K Pro evaluation, and I actually passed a max allocation stack of these 50K Pro evals like 2 CPIs ago, and then I ended up getting a $10,000 payout on those accounts just last week. And then these are the rules for the zero plan accounts with Alpha Futures. I do not have a code with Alpha Futures or Lucid, but if you guys do want some money off of your Alpha zero plan accounts, go ahead and check out the first link in the description. But these accounts here, as you can see, because they are the zero plan, have no consistency rule on the evaluation stage. It's only on the funded. So because of that, you're actually able to pass with just one trade. So these are my two firms that I would choose if I was going to do this method, which I will actually be doing it. I'll post the videos on Friday to see how it goes. But let's actually show you guys how to actually do the CPI method. So boom, here we are on TradingView. And now the first thing that I want you guys to just have noted down in your head is what the max contract size for that firm or for your account size is. So for the Alpha Futures 50Ks, the max position is 3 minis, okay? So we're gonna have that noted down in our head. And then also a reminder, CPI is an hour before the New York market opens. So I am Central Time Zone. So my market open is at 8:30. So my CPI is at 7:30 in the morning, right? So what you wanna do, okay? And it is very easy to mess this up, okay? You're going to wanna click trade, okay? If you're on TradingView, so you're going to click buy and sell. We're gonna start with the buy order, okay? It's going to be a buy stop and a sell stop. Make sure you're doing the right orders. They need to be buy and sell stops. And then what you want to do is you want to drag this order around 25 to 30 points above where price currently is at. So let's just say I was doing this right now. I would drag this around like 65 to like 70. Like this is around where you want to have it. And then we're going to do the exact same thing for our sell stop. Let me actually place this order. And then we're going to do the exact same thing for our sell stop around 30 points below where price currently is at. And then boom. So now that you have your buy stop and sell stop in place, I'm going to move my face cam, but you want to make sure you have the right contracts picked out. So I am on the NQ minis, and boom. So I just put in 3 contracts because that's the max size for Alpha Futures. I actually had to redo my order because I did not have the correct contract sizing. But again, like that's important that you guys pay attention to the little stuff, because this could be the difference between hitting take profit and blowing your account. So boom, I have dragged my take profit to the profit target for upside. I'm going to do the exact same thing for shorts, okay? And I'm going to explain what this does, right? So we can't predict whether CPI is going to go up or down. So that's basically why we have orders up and down. So CPI could either go down and then fill us going short, or it could go up and fill us going long. The reason why we have a little bit buffer in between the actual sell stops, they're 30 points away from where price currently is at, is because sometimes, because it's a high volatility, high volatile impact, high impact news, it often will shoot a wick in the opposite direction and then go in the actual direction it's supposed to go. I've actually added a section inside of my spreadsheet basically going over the outcomes of CPI for 2026. As you can see, I actually won on CPI in January, I won in February, and then CPI in March, everyone know was terrible. But these are the important stats right here, and it's the upside and the downside wick. And you can see this massive upside wick is what caused a lot of people to end up losing. And then as you can see, when it's, a month like January, we have a small wick to the upside and downside. It ends up working very, very well. The CPI news candle is usually around 100 points. And so that is why why we are going in with the max contract size, because as you can see, all you need with 3 minis is just 50 points in order to hit take profit. Also, another thing that is important, guys, is you want to set these orders like 30 seconds to a minute before CPI, because as you can see, price is just slowly inching towards my sell stop, and we don't want to get filled when the news hasn't even dropped. So I'm gonna have to keep dragging, you know, my buy stops and sell stops. I'm gonna have to keep dragging the orders lower and lower, but you get the point. So when the CPI news will come out, it'll usually give us a small wick, and then it'll absolutely shoot in either the long direction or the short direction. And the reason we picked the no consistency accounts is because that is how we're going to pass them in the first try and in one trade. So if you have everything correctly set up, you'll either get filled and hit take profit, or you might get wicked out and you'll end up losing. The CPI method overall has like a 90% win rate, which is actually better than most people's strategies. So I don't think that this is a bad way to actually go about passing your accounts, but it is very risky. I do not recommend doing this if you don't have the funds to blow on evaluations. You should be accepting the risk of how much you spent on that eval before you make up your mind and go ahead to do this. But now I'm going to go over and hop on to FX Replay and show you guys how it actually works in real time. Okay, so it is now the minute before the CPI news drops. This is going to be a simulation from January of this year. This is what I'm going to do, right? So I'm going to buy 5. Let's just say 5 is the max contracts that I can use for the firm I'm on. I'm going to right click about 20-ish points above where price currently is at. Then I'm going to drag my take profit to the profit target, which is 3,000. And then I'm going to do the exact same thing for downside. Boom. Notice how I did buy stop and sell stops. By the way, when you're doing this, you're not putting a stop loss. You're basically just accepting, you know, this either passes my accounts or it blows them. And so boom, now that I have my buy and sell stops in place, let's see what happens. And boom, as you can see, I literally would have passed in one trade, and you can see my P&L in the bottom right, and it's literally that easy. Okay, and here we are again, 1 minute before the CPI news drops, and we are going to, again, just set our buy stop around 30-ish points above where price currently is at, set the profit target to our target goal for the evaluation. We're going to do the exact same thing for the downside. And yeah, let's see what happens. Boom. Another account would have been passed right there, as you can see by the P&L at the bottom. And that's literally it. Again, only do the CPI method at your own risk. You are obviously risking the entire drawdown. This is not advice. Just be sure to accept the risk of how much that eval cost before doing this. And I would not recommend doing this on a funded, because that's just a really stupid way to end up blowing your account. But again, guys, if you want a discount on your alpha futures accounts, make sure you check out the first link in the description. Also, make sure your firm allows news trading, because I know there are some firms that do not allow it. But anyways, boys, if you want to work with me, my Instagram will also be in the description if you have any questions. And then there's also a Calendly link down below if you want to work with me one-on-one. But other than that, boys, I appreciate you for watching, and see y'all in the next video.